Greetings. Welcome to our discussion of the comprehensive problem for Chapter 3. The comprehensive problem for Chapter 3 can be found on pages 204 and 205 at the very end of the chapter. And I have the solution that's in the Moodle classroom set up for you here on the screen. You can see that it has the name of the company, and it says we're working with the General Journal for the first part of the transactions, the first part of the assignment, and it's for 2013. So let's look at what this problem says. The trial balance of Palico services of January 1st, 2013 had the following normal balances. So they're not segregating these for you. They're not putting them into debits and credits. They're saying normal balances. So that's the challenge to you, to say all the assets, the expenses, and the dividends would have debit balances. All the liabilities, revenues, and owner's equity accounts would have credit balances, and you'd have to segregate them that way. Then it says they experienced the following transactions. So there's transactions 1 to 13, and then there's adjustments 14 through 17. And the first requirement is record the above transactions in General Journal form. So when you look at the transactions in General Journal form and you open up the solution I have worksheet that I have ready for you, you'll notice that I'm only asking you to write every other journal entry because this is a very involved problem, and I'm not looking to take up hours of your time, but I do think that you have to begin practicing these. So this solution is in Word, so you can type these into Word if you want to, or you don't have to. You can print this and, well, I guess you'll have to, because you're going to have to submit this file to me, so what am I saying? Of course you'll have to do that. I guess you could do it without it being on a file, but you might as well just do it on Word. So let's look at number 2. Number 2 said paid the balance of $2,000 on the debt owed on a loan that is interest-free. So I would have to say paid the balance, and in this case I would do a debit to a loan to make that liability, the loan, go down because I don't owe those people the money anymore. The debit will make the liability decrease. And so let's see if I have a notes payable. So I'm going to debit that notes payable. And then I'm looking for interest expense, but this is non-interest bearing. So I don't have any interest requirements, but I paid it in cash. So I'm going to tab O, I paid it in cash. So it looks like, to figure out how wide this is supposed to be, so 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. So I'm going to credit cash, maybe only 8 even. There we go, we'll use 8. I'm going to credit cash because that's the journal entry I would need to reduce cash, an asset. It's going down. I credit an asset to reduce it. And the amount of the transaction was $2,000. So I'm going to put $2,000 in there, and I'm going to put $2,000, oops, into the credit because the asset's going down. So you're going to do this for each transaction. You're going to look at these and enter the transaction. So you're going to say for number 4, on May 1, paid, so cash is going down. Cash is an asset, so I'm going to credit cash, $3,000 for 12 months rent in advance. So I'm going to have a prepaid rent for 12 months. Oh, of course, I would have to sneeze. Sorry. Excuse me. So I'm going to credit, I'm going to debit prepaid rent because I bought this rent in number 4 in advance, and I'm going to 8 spaces in, I'm going to credit cash to make my cash go down by the amount of money that I gave them. And it's going to be for $3,000. 3 comma 1 2 3 and 3 comma. Now I'm going to leave you to enter the rest of these general journal entries that you have here, so you can begin to see. I'll use these two, transaction 2 and transaction 4, as my examples throughout the rest of this presentation, but you can see that you're going to enter those general journal entries in each of the coming event numbers 6, 8, 10, and 12. Then 13 is given to you as no entry, 14 is an adjusting entry, and 15 is another adjusting entry, so you're going to enter an adjusting entry for 15 and 17 out of chapter 2, and then you're going to, the math is down here so you can check yourself on how you did that or how you did, and then you're going to enter those 2 adjusting entries to close out the journal entries. So the first thing it asks you to do is to record the journal entries. Record the transactions in general journal form. So that's what you would have just done there. Then the next one is post the transactions to T accounts and determine the account balances. So of course you always post them to T accounts first and then determine the balances after the posting is finished. So I give you all the T accounts here. I give you the indicators of where you'll find the transactions that have to happen. And we just did this in the introductory transaction. So transaction 2 is a debit to notes payable and a credit to cash. So when I come over here, I'm looking for a credit to cash in number 2, and there it is. And I'll put in 2, 1 2 3, and then I'm looking for the notes payable, and there's the entry number 2 for the debit. And so I just enter all of these transactions in the T accounts. Now, I told you earlier that we need to have a lot of tolerance and compassion and generosity for one another. I tried to highlight all of the boxes. I might have missed one. If I missed one, then if I forgot to take it out, just keep the one that's there. And if I forgot to highlight it, put in what you know needs to happen. But you're going to enter those into the T accounts, just as I have done here for number 2. And of course, I said I would work through transactions 2 and 3. So prepaid rent is a debit and cash is a credit for number 4, and it's $3,000. So cash is a credit for number 4, and there's number 4. So I'll put in $3,000, and then I'm looking for prepaid rent right here for $3,000, and I entered number 4 for you. So you'll enter the rest of them. Now, once you enter them, then you have to get the account balances. So in the balances, some of them I've left in, and some of them I haven't. So you can see some of them you have to calculate, some of them. So you start up here with the balance in cash, and I left that one in, and it's $12,500. You have to make sure that your transactions matched that $12,500 balance when you're finished. If your transactions don't add up to that, you have to go back and check yourself. Now with accounts receivable right here, I didn't leave a balance, and I didn't shade it either, but right there it was blank and it was white, and so you'll have to calculate that account balance. Now, one thing that's helping you, because I did leave in where the balances go so you won't get mixed up on the debit and credit side. Remember that the normal balance is the way the account is increased. So these balances are placed here in the way the account, in the side of the transaction where the account is increased, either with a debit or with a credit. So you will post those and calculate the balances of all of those accounts. Now the next thing you have to do is prepare a trial balance. So here's a trial balance, and notice that what I did was I left some of the numbers in, but 4 of the numbers I'm asking you to go back to the T accounts and find that account balance in here, then bring it forward. And of course you're going to do it with copy and paste. You're going to just copy it out of the T account and then come and paste it in here. So you're going to go look up these 4 balances in the T accounts, and then you should have this total in your trial balance. Remember, the trial balance shows that the account is correct. If yours don't add up to this, then you need to figure out which of your balances is off. So here are the balances that the trial balance should equal. These you're going to have to go and transfer forward, and you're going to want to check yourself and make sure that these 2 total, and then you can proceed on from there. So there's an income statement to be made up. So here's an income statement. I took out all the expenses. So please enter all the expenses, make sure that they add up to this number, and then remember that it's revenues minus expenses. And this is the one where somebody did point out that it would be better if this was a minus sign or negative number for everyone. And so I'll send out an email that the expenses don't have their negative sign in front of them. So you're going to enter the expenses and total them to this number. And then on the statement of change in stockholders' equity, all the numbers are left in for you except the net income and the dividends. Notice over here how they're putting in the plus and the less. So of course when you add these up numerically, you're going to, the net income is going to be a positive number and the dividends are going to be a negative number because of these plus and less signs. Titles over here. So you have to build this equation correctly so those 2 are subtracting from one another. And actually you don't put any equation in there because I left the calculation in there. You just have to make sure that your 2 numbers come to this solution. So when you look at them, just make sure that your 2 numbers come to that answer. And then we have the balance sheet. So now I'm asking you to enter all the assets and make sure that they add up here. I'm asking you to enter the salaries payable and make sure that it fits in there. And then see that the rest of this balances. In other words, check to make sure your numbers are correct. And then this cash flow, I ask you to put in the cash of the loan payment and the cash of the dividend, and when you're finished, those 2 should add up to make $6,650. And I left the instructions here for you on the cash from customers and the cash from expenses so that you could see the proof of the cash flows from operating activities, cash receipts from customers, and cash receipts from cash payments for expenses, and getting this number. I wanted you to be able to see where that was coming from so you could gently become familiar with doing this calculation. We have plenty of weeks to work on that, so I'm not as worried about you learning that right now. I think you have plenty of learning going on. So enter those 2 amounts and that will be your statement of cash flows. Then you have your closing entries. Now this is new with this chapter, and so that's all blank, and you have to fill in how much the total revenues were and transfer those to retained earnings, how much the expenses were, and you'll get all of those out of your T accounts. So you go back to your T accounts, you get those balances, and you use those balances to complete this journal entry. Now when that journal entry is finished, I'm asking you to transfer the entries just into the retained earnings, the revenues and the expenses. So you can see they're all over there under that retained earnings area. So this is the balance. You're doing a closing entry and you're driving it to zero. This is the balance. You're doing a closing entry and you're driving it to zero. So you can make sure that your closing entries are those same amounts. And then these closing entries for the dividends, I didn't ask you to do that one. I just left it. But then the retained earnings, I ask you to put to post those transactions. So as we think about these entries, you're going to get new balances, and I left the balances in there so you'd have them. And then we have our post-closing trial balance, and so using those account balances from the post-closing T accounts, you then make your entries into the post-closing trial balance, and into the post-closing trial balance, they should equal this amount. Now, much of this is just doing some work and transferring it forward through the accounting cycle. And in my overview of the chapter, I told you where the accounting cycle was presented back in chapter 1. I want to say it's page 70 and 71, I'm not positive. And then it's explained extensively in chapter 3. So that's the main work that you have to do. I would say that this summary problem, comprehensive problem, even though you're only doing half the entries, you're only doing half the postings, you're not calculating all the numbers yourself, you're just entering a few of them here and there to begin to see how the numbers get transferred forward, it's still probably going to take you some time. I definitely would do it in Word and then save it on this file, and then this is the file you're going to want to post at the end of the week. So this is an exploration, perhaps a safari through the accounting cycle and entering journal entries. And I hope that I hope you do struggle a little bit, because from the struggle will come a comfort that you don't gain if you just watch me do it. But I've highlighted for you where you have to make these entries, and they all start back up here with you writing these general journal entries and then posting the work forward through the rest of the accounting cycle. As always, if you have a question, send me an email, or ask in class, or come see me in my office hours. Any of those ways, I'm more than willing to help you. So I look forward to seeing how you do in this fuller comprehensive problem. I want to say welcome aboard to the accounting cycle.